Welcome to Retirementals, a podcast that dives headfirst into the issues facing the financial sector at the intersection of investment, technology and financial advice. Hosted by Abraham Oksanya, you can expect raw honesty, critical analysis and energetic interviews. Here is your host, Abraham Oksanya.
Okay, hello and welcome to this episode of Retirementals. I am so excited about my guest today and the conversation we're about to have. Before we get started though, can I ask you for a big favor? If you're a listener to this podcast, please do me a favor, head over to Apple Podcast and leave us a review on there. And that just helps other people to find the podcast. The latest review, I'm going to read it out to you because I love it, right? From someone who goes by the name of Sophie Gilb 89. I think I know who that is. And basically they said, great to hear from Abraham and David this week. Two people who have both had an important part, been an important part of my journey in financial services. I remember David flying down to our Luton office with Barry Nielsen to discuss ways to improve the Nucleus platform. No wonder Nucleus is very successful. I think I know who that was, who left that review. Thank you very much. I'll stop blowing smoke up my own bum right now. Let's just dive right into the podcast. I'm so excited by my guest today. I have David Harvey on the podcast, who is the co-founder of Seccl, the software as a service platform that's been making a lot of noise. Hi, David. Welcome to Retirementals.
Hi, Abraham. Thanks for inviting me along today. It's looking forward to the chat.
So I am really excited to have you on the show because you've been on a journey that I'm trying to go on, which is setting up a company and scaling the company. So tell me a little bit about your journey. What led to the creation of Seccl?
Yeah, so if I just say a little bit about my background first. I mean, I've spent pretty much all my career in wealth management, but very much in the technology side. And over my career, I've worked at software providers. I've worked on, if you like, firm side who are implementing the software. And for a time I was at Eccentric. So when Eccentric, just prior to launching, I was actually part of the software team which helped build that, and obviously worked alongside Hugo to get that up and running, launched. And I left there when I think we just ticked over the first billion back in 2010, I think it was, when I left there. And I continued working in the industry, but I got to a bit of a point in my career, if you like, a bit of a crossroads that I'd spent a bit of time doing some consulting work with fintechs, and they just opened my eyes up to look, this is a really different way of working. You can build something on a really small budget. And the other thing which made me interested is actually you can bring people from outside the industry who look at our industry in a different way, and actually almost go back to first principles and say, well, actually, why are you doing it that way? We've got baggage on our shoulders. Oh, this is always the way we've done it. But it was that challenge which inspired me. And also at the time, I came across a different way of architecting systems. So I'm not going to go into that. That's a whole podcast on its own, just talking specifically about that. So I won't go into too many details. But it really changed the game for me. It basically that architecture allowed to build quickly and build for change. And we know this industry changes quite readily. So with that in mind, I thought, well, actually, now's the time I'm actually going to, stop procrastinating about this and actually start building something myself. And I started that. And then I bumped into Hugo, which is leaving dude from Eccentric, and I told him what I was up to. And his first comment was, well, good luck with that, Dave. As he was steadily winding down to a couple of sort of non-exec roles, semi-retired, if you like. But a couple of weeks later, he phoned me up and said, actually, can we have a look at that? And obviously, I got his juices flowing again for his last hurrah in the industry. So we got together and we decided, although it was a technology product, we actually decided to get regulation and get custody permissions to actually create a custody service. We felt at the time just selling a top technology project, particularly off the back of what was happening in the industry with some of the replatforming woes. We felt that a new tech provider knocking on the door of some of these companies wouldn't be a good idea at the time. I don't think they'd gone down so well. So we decided to do the custody, create a custody service, and with a couple of markets in mind that we'd identified, which were potential areas of growth which weren't really being tapped into. So so we got that together. Fortunately, Octopus, we came across their table. I met Sam. And then we realised we had some quite a lot in common about our vision and the like, and we were purchased about 18 months ago. So that's how we've got to where we are today, in a very short pot of the history of that, if you like.
Thank you, brilliant stuff. I'm going to take you back a little bit just before we go forward. So obviously you sold the business to Octopus, for 10 million, a lot of money. We'll come back to that, but take me back. How was this seeded? So I want an insight on the process of, did you raise funds? Was what was that like?
That was the hardest thing, I think, was actually raising the funds. We were very fortunate. We were involved with a firm who have a lot of angel investors who literally take a punt on new things like this, and so we were quite grateful for that to get us off the ground. And I mean, if you talk to Hugo, he did an awful lot of walking around the city and finding people and introducing ourselves to them. It's difficult. I mean, our subject matter is quite arcane. We're not a consumer app. So you can't do a crowdfund. It doesn't really, people can't really.
Exciting, yeah.
No, exactly. Yeah. Oh, what's client money? The person on the street's not necessarily going to have a great interest in that. So it was pretty difficult, actually, and we had some bumps along the way. I'll be honest, we did have some bumps along the way of that funding journey. Fortunately, we did have some. We're very grateful for some of the backers we did have along the way, which kept us going. But we just felt we couldn't get going enough with it. That was one of the challenges. The big challenge, of course, we had was actually it's a slight contradiction, really. The regulator is really encouraged, and they've done an awful lot to encourage new entrants, new startups with their sandbox, etc., etc. However, the rules also say that if you're a firm looking to buy some services from another firm, you've got to look at their financial strength, etc., etc. Now, no startup is going to have a really strong balance sheet, and you've got to put a lot of faith into. So there's a contradiction there, and I'd love if we could somehow, to encourage more people to do what you and I are doing. How can that contradiction be resolved? It'd be interesting to see going forward if there are some ways of doing that. Because I say we presented prior to the acquisition, we presented to the firms and they loved what we were doing. But as soon as that question came up of balance sheet strength and funding pipeline, you could just see the enthusiasm drain away. And so that'd be an interesting thing to explore at the time of how can
absolutely. I mean, it's interesting actually that you went there, because it's one of the things I was going to just essentially having this conversation around what led you to sell the business so early to Octopus, but grateful for that insight, because there's a similar thing happening, isn't it, with I forget the name of the platform now, it's escaped me, that AJ Bell bought.
Oh yes, yes, yep.
Yeah, it's like
Adelpha.
Adelpha.
Yeah, they're based in Bristol. Yeah, we know the guys. Yeah.
Before the business is even launched, right? They're being bought, and it's that issue of cap ad and financial strength and all that stuff, which is all very, very important. A segue story, actually, how people connect, is that one of your, I don't think you'll mind me saying, Paul Resnick, I know, invested.
Yes. Yeah.
And when I was pitching Betafolio to Paul Resnick, that was around the time that Octopus was, of course, buying you guys. And Paul got a nice, I'd say, big check from that. And not that it's directly linked, but I think it made that conversation for him to back us much easier, right? Anyway, moving on. So talk to us about the business today. what is the team look? What does the team look like? The technology and the market segment that you're trying to attack?
Yeah. So we spent. I mean, like I said, just prior to the deal, we didn't spend a lot of money at all, and but doing the deal actually allowed us to put some of those things in place, some of the infrastructure in place within the company. So we've built the team out. Lockdown, we've actually done very well recruiting people during lockdown and onboarding. I mean, that is a challenge, but actually it's gone particularly well. So we've built out some of our operational teams, our customer team in particular, and we're trying to beef up the engineering team. For a long time, there was just effectively, 3 or 4 engineers working on this. So, it's just allowed us to build that out, which just gives us a bit more, resilience, if you like. So that's been really good. And we've built things that, we strengthen our finance and compliance functions too. In terms of the 2 markets we're specifically concentrating on at the moment, and it's the same 2 markets that we identified right at the start. One of them is the fintechs. So there's an awful lot of fintechs out there trying to create new apps and trying to actually, people who are first-time investors or potentially going into coaching or even automated advice, if you like. There's a load of those guys out there. Weren't particularly well served by existing custodians, and number one, some of those custodians didn't particularly want the business, but equally, technology didn't match what the fintechs were expecting. If they connect to something, I don't know, like GoCardless, they expect a really simple API to work against. That was one thing we wanted to fill that gap from a custody point of view. You've got an API here. This is how you integrate it. Let's get going. So that was a gap, and for us, the vision there is actually helping the first-time investors, people who and potentially people who need guidance. That's the target there. The second target was actually obviously Hugo's been around in the platform industry a long time, so he sees the trends in it. We recognised there were some firms who perhaps had grown up with wrap, who had the governance structures within those firms to actually become a platform of their own, like a micro platform of their own. And we felt actually we could provide the technology and the custody service to allow them to facilitate that. It gives them a greater control over their client journey. It brings them even closer to their clients than what they have with an existing wrap platform. So we felt there was a market there. We didn't know the sort of size of that market when we first came up with the idea, but certainly Hugo put some feelers out there, and actually we realised, yes, there's an awful lot of interest to this, particularly those firms who perhaps have a DFM arm to them. So we felt it was a really strong fit for those guys, particularly if they want to distribute to other IFAs. They could, like say, create a micro platform of their own. And one of our early firms, P1, they were exactly that model. They wanted to not only for their own service and their own in-house IFA, they now distribute it out to different firms. So those 2 markets are effectively the ones we're targeting. Obviously, future plans. It originally was a technology product, and potentially selling software as on a SaaS basis in the future. That's definitely on the cards. There's an awful lot of sort of back office market facing software out there, which is quite old now. There's still some mainframe green screen stuff lurking around the industry, and actually, why don't we change that and actually bring it on a software as a service basis? So that's a potential future market there. But we're doing well. We're generating some interest in the 2 markets we're focusing on at the moment. So it's all good.
Fascinating stuff. So actually, your offering isn't aimed directly at IFAs, your small independent IFAs. You're really targeting, larger, perhaps IFA firms who have some sort of discretionary permission. Yeah. Right. Okay.
Yeah. Exactly. We feel to run the discretionary models, you have to have that extra governance in there anyway. And so we felt that was a sweet. That's not to say, I mean, there are IFA firms who want to use our service. Anyway, we're talking to a number of them. It's more often than not, they already have the permissions to do it, but some don't. There's 1 or 2 extra permissions they have to take to facilitate that. But we there's a sweet spot there. We think there is, and it is that control factor for their clients. It does bring them closer. They don't have a third party in the way of it all, if you like, and that's the thing which is attractive to firms who are coming our way.
That's brilliant. So talk a little bit about the fintech side of things. You know, you've been doing some interesting stuff on there. You've essentially helped a couple of the fintechs, you know, come to the market. Talk a little bit about, if you give us a few examples of the ones that you've been working with, and what you're doing for them in essence.
Sure. So for the fintechs, let's take an example of let's use Penfold.
Penfold, yes.
So I'm sure you heard this. So they're
I have, but again, for the purpose of the audience, who is Penfold? What do they do, and how do you guys?
So Penfold, again, they've spotted an absolute niche in the pension market, providing a pension for self-employed people. And that's their niche, and actually they've hit a really good sweet spot there, and they've got a great app to easily allow self-employed people to invest into their pensions. So for them, I mean, they outsource their pension, and they sort that side of things out. But for us, the reason they needed us was just for a pure custodian service via an API. So they could actually just hold their assets on the, and obviously they didn't have the client money commission, so we just run the client money and the custody for them via our API. So it's a relatively simple set of functionality that we offer them, but it's easier to integrate. I think they integrated to us within literally weeks. It was just a few weeks to get them up and running, and they've been really successful. You know, we do work together with firms along the way. As the sort of difficulties with then like we might have to make a different integration to payment providers or something. We've helped them out with things like that. So that's been a really good relationship with those guys. There's another example of Wombat. Wombat,
yeah.
Wombat. So they're more a first-time savings app. And again, it's the same service we provide to them. It's just that trading custody service for them via the API, and they have their app.
So Wombat's an interesting one, and I want to come back to the sort of the advice and wealth.
Yes,
but Wombat's an interesting one. So you guys are in the mix in terms of the custody side of things.
Yes.
And are they using some sort of US-based app? You know, I thought it was Drive Wealth for the direct, security side of things. I'm not quite sure how the equation works. So they use them to trade, and they use you guys for.
No. So they send all their orders to us, and we send them out to the market. We don't actually have an in-house dealing desk. We outsource that. That's one of the things we felt, again, as a startup, we felt that was probably a bite too much to take at the time of what risk capacity do we actually have. So we outsource that. So they send their orders, so we send them out to market, and they get executed and settled on Crest. The Drive Wealth one is an interesting one, and that's something we are considering, because there's pros and cons of that, but there's it's a way of facilitating really, really cheap a trading. But there obviously are the whole. I mean, I'm not an expert on it, but there's the whole PFOF thing as well going on there as well. So, which I think you probably were a lot more knowledgeable on that than I am. But we have a service where we can accept orders. We will send them to market, and we'll settle the assets into our nominee. And again, it's all via the API.
Incredible stuff. So let's come back home, right, to the sort of the IFA world. So let's take the example of P1, for instance. So you're providing them custody for the API, or the API custody, and they build the front end and the integrations with the likes of back office system in Intelliflo and the like. Is that how?
Not quite. So for the fintechs, it's just an API thing, because they've all got the tech teams and obviously some IFA firms don't have a tech team. We have some IFA firms which do, but some don't. P1 didn't have at the time. They didn't have any tech team whatsoever. So we actually provided the front end for that firm. So So we set them up as a platform. We provide the front end. Again, that talks to the same APIs as what Wombat does or Penfold, and we handle the custody underneath the hood for that.
And who builds the integration with the back office system?
So the integration, yes. So we're building integrations, but we also have other firms who've chosen to build that themselves.
Right.
So for instance, there's a firm called Digi. And there's a connection there with P1 as well, but they've built their own software calling our APIs. They've actually moved slightly further to the left within the whole IFA journey than what we have, but they've built a suite of APIs into some of the main players of the back office market. So it's a we can do either. So we're building them, but equally our firms, they can integrate to us and integrate to your back office providers or any other tools they like at the same time.
That's interesting. I should check that out. Did you say Digit?
Digi. It's
Digi. Okay, good. Without the T.
Yeah, exactly. Yeah.
Cool stuff. No, fascinating stuff. So let's talk a little bit about the cost. Yeah, my favorite subject of the cost structure.
Yeah.
So give us an insight to that. So what does the cost stack look like from the perspective of the wealth management firm or the IFA firm, working with you guys? Sure.
So we landed on a BIPS charge in the end. But we do have some sort of usage-based type charges in there as well. So for example, if we had a firm who wanted to offer a universe of say 5,000 instruments, they're going to pay a lot more than a firm who's offering a universe of 50 instruments, because there's an actual cost to us of number one, getting prices for those extra instruments, running dividends, running reconciliations for that extra. So we decided actually, there's a usage-based element of it in there as well, which sometimes BIPS, particularly as you lower the BIPS, doesn't cover. The firms themselves, so we only bill the firms. We don't bill the end client, we bill the firms. The firms themselves can choose whatever pricing model they then use. So some firms choose to put some margin on just to cover any additional costs they might incur as running the platform. Others choose to put a lot more on there. And it's really up to them. We make no influence of what they decide to do with their end client charging, but they'll charge the client. The money from the client goes to them, and we process all that for them. So it's optional really. We don't dictate that.
So again, I'm going to push you for a figure. What order are we talking about? Because I know there's a calculator on your website, this is transparent. So we're talking what? 10 basis points.
10 basis points is the charge. Yeah.
And then the usage fee is on top of that. Yeah. Right, and that includes not just things like trading additional security, but talk about the wrappers, the tax wrappers, and the sort of because you guys don't have a SIP wrapper right now, and I gather you're getting it. So talk to me about what.
So we have a SIP wrapper via a third party. So and again, that cost is passed on to is passed. So we don't bundle it all up with our charge. It's passed on to the client. The usage-based charges where we do incur trading costs, we will pass that on. And so that's normally around exchange trades. So we will pass that cost on, and that's partly our own costs of settling trades plus dealing costs. So we will pass that on. The usage charge in the instrument is a very, very small amount. So if someone has got 100 assets in the universe, it's not a significant amount they're paying. It works out in a few £100 a year type things. Right. It's not significant. So that's kind of where we want to be going with it. Is the usage charge in the fee? And I think in the future, I think custody costs are going to come down.
Why is the flat fee structure in the sort of thing that you're doing so difficult? I have my theory, right? Yeah. And my theory is that you've got all these people in the plumbing. Yep. Or the trading, your kind of all funds, and what's the other one? I forget their name now. Who are essentially doing the fund trading, and because this platform, my words, not yours, their legacy, they are essentially drunk on the good old basis points. It's impossible for you guys to, because ultimately what you're doing is providing a technology. Why should that be based on, why should that be AUM based?
I think in the future that can change. What I would say is you don't need tens of millions of pounds building this technology.
Right.
We certainly didn't spend that much. I mean, you talked about Paul Resnick. You ask him what the sort of rough figures were, but we didn't spend tens.
I know the figures. I just don't know that you like me to talk about it. But carry on.
Yeah. No. So we didn't spend that, and that's the myth which has got to be. Frankly, the fintechs prove this as well. I mean, I saw a fintech out in Madrid who actually had their own client money permissions and ran that
Right.
themselves. They did not spend millions of pounds. You don't need to do that anymore. So then you've got to look at it. Well, actually, how can we then start bringing it down? It's the technology to bring it down. There's all sorts of automations you can do. There is a point though. There are some market services out there which do have a basis points charge, and it's quite difficult to move away from that. So, for instance, Crest, there is a small basis points charge for custody, and it's more if you want to hold US stocks, for instance. It's a greater charge there. So you're going to get it down to a certain level, but then the whole usage-based thing comes in. You know, if you think of how platforms work, they'll charge 25 basis points upwards, and it's all bundled in, and no one really knows what does it cost? How much does it cost to take payments?
We don't.
In an easy bits charge. It doesn't need to be like that.
Yeah.
The only other challenge to it is if you do go this sort of usage-based charge model, it's then how do you present that to the firms, and how can they overlay that and then present something simple to the client? Because one thing we do want to keep it's something simple for clients to understand. There's a challenge around that of how it gets presented, but ultimately custody should be able to come down and move towards like I say, a more usage-based flat fee type structure in the future.
I think what you're doing is really fascinating, because what you're doing is essentially yes, I don't think this is for small independent IFAs with less than, I would say, 200 million of assets, but essentially any reasonable firm who wants this responsibility can take it on, right? A lot of responsibility, additional responsibility to take on. So we could end up where, I don't know if we're going to get there, where everybody kind of have, I say everybody, but you have multiple platforms. Yep. It's no longer, 20 or 25 or 30. You could have essentially different implementation of your API.
Very much so, yeah, and that's and to be honest, there's other players in the market similar to us who are trying to do that. So someone like Octopus, they've got the same idea. So yes, I think that's a possibility. I think people have been scared off this whole thing. And again, when you're seeing figures like £1 billion spent across the industry replatforming, that puts people off. But like I say, it doesn't have to be that way. I mean, we've proven it doesn't have to be that way. So yeah, it is possible to have an explosion of these micro platforms, if you like.
Yeah, I mean, the fascinating thing, coming back to the issue of cost and the traditional platform, is that if you take somebody like us and advisors that we work with, essentially in our portfolios, we have 6 funds, right? I'm thinking of a range of portfolio, but we have 6 funds, right? Those 6 funds are from 3 asset managers, right? Dimensional, Vanguard, BlackRock, right? We have a few other firms who have something slightly different, but right. So it shouldn't cost 30 basis points to hold, and we don't trade often. We use drifted tolerance and in terms of the rebalancing side of things. So it shouldn't cost 30 basis points, but of course, because the traditional platform, they have to layer in the cost of the other IFA down the road who maybe want to hold 50 different funds and go in and out of the market. That essentially that cost gets passed to our clients, which we don't want. So I think your model is very enabling in that regard.
Yeah, no, that's a very, very interesting. But that whole cross subsidy thing, we've always to try and shy away from that. The firms should be paying for what they're using, not what other firms are using. So yeah, totally get that one. So
fascinating stuff. Fascinating. Look, I think you've done an incredible job. You sold the business to Octopus for 10 million. I think it's public record. So you must be awash with cash. How old are you? You look like you're in your 30s. What are you going to do? What are you doing with all this?
To be honest, so I'm in my 30s. That's very, very flattering. But I'm not. I'm actually a little bit older than that. But no. Look, the whole Octopus thing. There's no exit yet. There's still a lot of work to be done here. So no, I'm not awash with cash. So no. Look, to be honest, we're particularly grateful with Octopus, and the thing which I really liked at the time was actually this is a long-term thing. It's not a short-term 3-5 years churn it. It's a long-term project, and then we've got a lot of ideas of some of the other things we can do within the group itself, particularly with some of their recent acquisitions in terms of Hatch and the like. So there's some exciting things we think we can do as a combined thing. But Octopus take the view of long-term projects to do the right thing for clients and advisors. Which is what was attractive about it at the time.
I feel like I should move on, or you want me to move on, but you're being modest. It was a cash purchase, wasn't it? It wasn't like an exchange of shares of Octopus. So I'm not saying that you're going to run away.
No. It was a cash purchase for the shareholders, not necessarily the founders.
Right. Okay, that's interesting. Okay, you're secret safe with me. No,
exactly.
Right. Okay. Good stuff. So I want to begin to wrap this up with 2 questions. So tell us. So this is a podcast about retirement, after all.
Yes.
So tell us about how you personally, David, how do you think about your own retirement plan? Of course, this is still looks like this is decades away, but how do you approach this? What do you hold in your portfolio? What does that look like?
Yeah, so well, when you do a startup, particularly if you've never done it before and had major successes before, the whole saving for your future goes on the shelf for a little bit.
Yeah.
But obviously no. So I've come back to that now into that world. So look, I'd have a sip. I have a model portfolio for it, and frankly, I allow. I'm not an expert in it. Discretionary managers are experts in this, and I've just allowed them to manage that on my behalf. So that's the way I think about it. I'm now in a position where I try and fill my ISAs up each year. I try and do the junior ISAs, but the junior ISAs is a funny one for me because although yes, it'd be good for the kids to have some background, but I don't want them. I mean, if you look at the ISA limits now, and you think if you invest into that for 10 years, well, what they're going to do when they're 18 with all that money. And I think, well, actually, no, I'm not sure that's a good thing, actually.
I schooled it into my 9-year-old, right? That this is your university, this is your university money.
Yes, but when you got,
who knows what they do?
it could be university money, and I think that's fair enough. But it's a big limit now. And you can buy an awful lot when they're 18. So there's just that element of me, I think, and maybe that's my background, but it's actually they've got to know to work for this as well. So but that's a parenting discussion, I suppose, isn't it? So
and just put your big vision out there in the world. So you still have many more years in the industry and with Seccl and what you're building. So we're sitting here, you and I, in, let's say, 10 years time. What is Seccl? What does Seccl look like? What change or difference are you making in the world?
Yeah, so the goal, one of the original goals, and again, this is completely supported by Octopus because they had the same thing. It is that we actually want to bring that cost, what we've already touched on, the cost down. If we can bring custody down, that's great. If we can create technology to make advisors more efficient, then actually that advice fee starts, the cost of advice starts coming down, and we can bring that down. And then what that means is then the entry to get advice, that starts coming down. If we can facilitate fintechs, they start bringing people up, and eventually those two worlds should collide. So that, for us, that's what the main mission is. From our point of view, if we do that via a custody service, that's great. If we do that by our SaaS service and we power, an online broker or something like that, we're facilitating it all across the market. That's effectively we want to be across the market doing this stuff, whether it's technology, whether it's custody. We want to be facilitating the bringing down advice and giving access to help, whether that's guidance through something like Hatch. We want to facilitate people getting the help they need. At the moment that people who get the help have got to have a certain amount of assets before it becomes viable. We want to change that world because frankly, some of the people lower down would probably need the help more, if you like. So that's the mission there. But it's and for us as well, we definitely see there's opportunities overseas with the technology. There's definitely potential future growth there, and in some respects we can kind of replicate the Octopus Energy model to a degree. That's exactly what they've done. They've created a great energy service in the UK, and now they're selling their technology to other parties, one in Australia for instance. So that it's that model we'd like to recreate if we can.
Incredible stuff. Look, David, it's been incredibly inspiring talking to you, learning about your journey, and long may it continue. Thank you very much for your time, and thank you for coming on the podcast.
Yeah, thanks a lot, Abraham. It's been really enjoyable. So good to talk.
I'll be remiss if I don't thank my incredible team who worked very hard to put this program together, led by my producer, Hannah Dickinson. Thank you very much, guys. I'd like to thank our sponsors, Timeline App, the retirement planning software, and Betafolio, the high-tech, low-cost flat fee model portfolio manager. And to you, our listeners, thank you for your time. I hope you've had as much fun listening to the program as we have making it. You can find more about the show at retirementals.co.uk, and you can follow me on Twitter. My handle is Abraham on Money. Until next time, thank you and goodbye.